Mswano ingozi ithula akayithathe akahambe nayo akayithathe yedenza bakhe
It's 1400 hours. You're watching Market View, the Monday edition. Thank you for choosing us. My name is Sifiso Ngumala. I'm happy to host you on the program this afternoon. On the show today, Eswatini sugar industry is on spotlight, and it has long been one of the pillars of the national economy. It contributes significantly to employment. It contributes significantly to export earnings as well as GDP. But as global trade patterns shift, climate pressures intensify and production costs continue to rise, the sector is being challenged to evolve beyond its traditional model. Today we explore what the next chapter of growth looks like for the industry, from new export opportunities and investment prospects to the empowerment of smallholder cane growers and the implications of changing trade dynamics with key partners such as South Africa and China. Joining us will be Banele Nyamane, the Chief Executive of the Eswatini Sugar Association. But before all of that, we want to start our program by looking at the business news that define the day. In our first story, a new system to modernize tax collection and improve transparency at the point of sale has been launched. The electronic invoicing platform that is known as TaxCore Electronic Invoicing is set to tackle commonly reported challenges such as tax evasion, underreporting and non-compliance, which contribute to the tax gap of over 4 billion emalangeni. The Minister for Finance, Neil Reichenberg, says this electronic invoicing program will help the Eswatini Revenue Service to collect tax more accurately, as well as to detect risks earlier to protect revenue that is owed to government.
The current VAT and income tax reporting environment still requires or relies heavily on manual processing and self-declaration. While many taxpayers comply honestly, the system also creates room for errors, manipulation, as well as deliberate evasion. Some of the challenges identified include suppressed sales, non-issuance of invoices, inaccurate declarations, incorrect claim for refunds and offsets, weak record keeping, and delays in detecting non-compliance. These challenges make it harder for ERS to respond quickly and effectively. The electronic invoicing system, TaxCore, will help address these weaknesses by enabling business transactions to be recorded, digitally signed, and securely transmitted to the ERS. This creates a stronger audit trail, removes the reliability on transaction data, and reduces opportunities for manipulation. The technology will move tax administration from delay detection to real-time and data-driven compliance management. The system will help reduce manual reporting, improve the accuracy of records, and create the possibility of pre-populated tax schedules and returns as the system matures. This will save time, reduce errors, and lower the risk of revenue losses caused by incorrect declarations. There's also a fairness issue at stake here. Businesses that comply should not be placed at a disadvantage by competitors who suppress sales to avoid paying the correct tax. Electronic invoicing will help create a more level playing field where businesses compete on the strength of their products and services and not on their ability to evade tax.
The Minister of Commerce, Industry and Trade has officially announced a new board of directors to the Eswatini Investment Promotion Authority. He says this board is going to lead efforts to accelerate entrepreneurial growth. The appointment of the board comes at a time when government is intensifying efforts to create an enabling environment for business expansion as well as for attracting domestic and foreign investment to generate the much-needed employment opportunities for Eswatini. In his remarks at the APA offices in Mbabane, the minister introduced Ubombo Sugar's managing director, Moses Siyaya, as the new chairman of the board.
The appointed board of 6 new members is expected to play a critical role in promoting investment and creating job opportunities across the country through industrial and commercial activity. The board consists of Labour Commissioner Kingdom Mamba and SBS Bank Managing Director Mbalis Banyoni, among others. The Minister for Commerce, Honourable Mangoba Khumalo, says the new board has been entrusted with the responsibility of providing strategic leadership to enable private sector development.
This board is expected to provide oversight, strengthen corporate governance, and guide the authority in executing its mandate with efficiency and accountability. I do want to say, and my team knows, I have a huge expectation around this institution. This must be the premium organization that government owns in the country. We've done a lot of work to liberate this organization from government as much as possible, which has involved moving a lot of the assets that were previously held under government to being held directly under IPA, mainly being the factory shell assets that up until recently were always held under government and limited IPA's ability to execute their mandate because they had very limited autonomy. But we've worked very hard on that. We are also reviewing the investment policy to make sure that it is best in class, and that will inform a revision of the 1988 Act.
Chairman of the board, Moses Siyaya, says as per the development agenda, they will hit the ground running in implementing and achieving the demands of Eswatini's investment strategy.
As a new board, we are fully aligned with the national mandate, and we look forward to working closely with the ministry and IPA management under the capable leadership of the CEO. We also look forward to working with the private sector and all stakeholders to ensure that the agency continues to deliver with professionalism, efficiency, and integrity.
The new board has been appointed for a 3-year tenure with the responsibility of providing strategic direction, strengthening institutional governance, and ensuring that IPA delivers on the mandate of driving investment promotion and facilitate both domestic and foreign direct investment into Eswatini. Reporting, Notsiles Tole, Vumingo Sinzinisa, Mbabane.
Well, that marks the end of our business news. We connect with the Eswatini Sugar Association's Chief Executive, Manile Nyamane, after the break. Stay with us.
Hello to all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Mbabane. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. Eswatini's sugar industry produces about 640,000 tons of sugar each year, and that generates around 7.7 billion emalangeni in revenue. The sector accounts for a quarter of the country's export earnings and supports nearly 30% of the national workforce. About 67% of Eswatini's sugar is sold within the Southern African Customs Union, popularly known as SACU, making the region the industry's most important market. As global trade dynamics shift, the kingdom is challenged to think strategically about market diversification as well as long-term risk management. Joining us now to unpack how the local export industry is preparing for the future, the Chief Executive of the Eswatini Sugar Association, Balele Nyamane. Very good afternoon. Thank you so much for your time, Mr. Nyamane. Really appreciate you joining us on the program. When you look at the current state of Eswatini's sugar industry, what gives you the greatest confidence about its future, despite, of course, the challenges that it's facing right now, the global sugar market?
Thank you, Mgune, and good afternoon to the viewers at home. I think the industry has done a lot in terms of preparing for the future. We've done that in terms of how we've structured ourselves, the collaboration between the millers and the growers, which is facilitated by Eswatini Sugar. We've also invested to make sure that we continue to be one of the lowest cost producers in the world, which then enables us to compete with all the other players in the world. What we are currently focusing on to ensure our long-term sustainability is increasing our product mix or product diversification. You will recall that we have recently launched a type of sugar which is called the Nucane. So our focus at the moment is to increase the market for that sugar. We are targeting the Middle East, also the East Africa region. We are also exploring ways in terms of how we can take that product to markets like the USA. In terms of reducing our cost for our growers, we are sort of embarking on a program whereby we are increasing our research capabilities. One of our key targets on that is to make sure that we can come up with the cane varieties that will be resilient into the future, especially to address the challenges that we are facing around climate change. So those are the few issues that the industry is working on.
And of course, the industry has historically relied heavily on a few traditional export markets. Just how aggressively is Eswatini now pursuing diversifying, as well as, which emerging markets present the biggest opportunity now?
So at the moment, the opportunities lie in East Africa. If you look at the statistics, the most or the highest or the growing market in the world is East Africa. So we already have a foothold there in terms of supplying into Kenya. We have established a network and partners that we are working with. Markets like Tanzania as well, even though they are self-sustainable, but due to the increase in the market, we think in the future we will have space there. Other markets that are offering opportunities is the DRC. At the moment, the only constraint is the logistics when it gets to that market. But we continue to work with the partners that have got more experience in that market to make sure that we can access that. In terms of other markets that offer opportunities for us in terms of niche products, it's mainly the Asian markets. We've predominantly not played there because Brazil has been the dominant player in that market. But we believe that if we offer certain products that the Brazilians are not able to offer, we should be able to attract and grow our market in that area.
Yeah, and of course, I think that also, allows us to speak about this critical conversation, this, increasing global conversation around value addition. Beyond raw sugar exports, as it were, what opportunities exist now for Eswatini in products such as ethanol, specialty sugars, renewable energy, or downstream manufacturing?
I will start with the specialty sugars. So we've just completed a project at Mhlume whereby we're increasing our packing facilities. So in the past, as we have said, we've been traditionally sending our raw sugar into the EU. But over the past 5 years, we started with expanding our packing capacity at Ubombo. We've now rolled it out to Mhlume to make sure that all the sugar that we can produce is put into bag. In terms of specialty, besides the new cane, we are also supplying or producing what we call Demerara sugar. The main market for that is in Europe and also in the Middle East. We are able to command the premiums that can be as high as 100 euros per ton. Speaking on the other products like ethanol, as we have mentioned, I think this morning we're hearing the news that Brazil is looking at increasing their blending mandate to 30%. Unfortunately, in this part of the world, we have not yet started blending ethanol with fuel, but we are in continuous engagement with our partners in South Africa, the South African Sugar Association, just to nudge them to encourage their government to accelerate the process whereby this part of the world can also explore blending. As you can see, if we're blending, I think the consumer will be benefiting in these trying times whereby the oil price has skyrocketed.
Absolutely. And of course, speaking of trying times, I can imagine climate change, presenting a trying time, not only for the consumer, but for the businesses as well. It is becoming impossible to ignore across agriculture. How vulnerable is the sugar sector currently when we speak, climate change, and what investments are being made around sustainability, conversations around irrigation and the likes?
So in terms of us reducing our water consumption when it comes to irrigation, we are encouraging our growers to embrace what we call drip irrigation. So those that are coming in are now directed into that. We are also increasing our trainings and awareness to the growers in terms of teaching them about irrigation scheduling so that they can conserve the water that they are using. We are also looking into the varieties as well that can respond to the prevailing climatic conditions. One of the things that has negatively affected us is with this changing in weather patterns is that last crushing season, we unfortunately could not finish crushing our cane because there were extensive rains in November and December. So what we are looking at as an industry is to try and invest and increase our milling capacity so that we can reduce the period which is currently traditionally from April to November. So we are looking at shortening that to make sure that we are able to crush all the cane within a short period of time. Ubombo has already started their project on that, and the mills in the north, which are owned by RES, are closer to finalizing their investments into that as well.
Yeah, and of course, smallholder cane growers, they remain quite the central, pillar to the industry's ecosystem. Just what practical support systems are currently in place, to ensure that smallholder producers remain viable and competitive?
So what we are exploring with the millers is just to try and assist the growers in terms of procuring as a group to try and assist them reduce their cost. The association through the extension services as well, we do offer advices and technical support in terms of at the moment our strong support is towards assisting the growers to assess whether it will be viable for them to convert into solar. We've got a department that is dedicated to that. We are also increasing our research in terms of what can the growers do to reduce reliance on fertilizers. As we've just mentioned that most of the fertilizers are coming from the Middle East. At the moment, the prices have gone through the roof. So we are looking at practices whereby the growers can be able to grow but reduce the use of fertilizers, which will then translate into savings.
Maybe as a parting question, rural economies and communities surrounding sugar production depend heavily on the sector. We see it a lot in the sugar belt, and there's always conversation around it. If you had an opportunity to just, candidly teach someone how important the sugar industry is in sustaining livelihoods beyond the direct employment figures.
I think it goes without saying what we are currently seeing at Eswatini. The expansion of that town overnight has been as a result of LUCIP 1 and currently LUCIP 2. So that just goes to show the impact of sugar. You look at Simunye and Mhlume, all those towns exist purely because of the sugar industry. You look at the expansion that has happened in the north towards Madlangambisi. All those sugarcane fields has resulted in the booming or the increase in activities around Buhleni. So that just goes to show as to how important or how the sugar industry can change the livelihoods in and around the areas where we operate.
Mr. Nyamani, you go ahead and enjoy the rest of your day. A lot of work ahead of you, I believe so. Thank you so much for your insights. He is the Chief Executive of the Eswatini Sugar Association and is chiming into this critical conversation around the shifting trade dynamics as well as markets, particularly within the sugar industry. We have Sunny Lesbia, our economist, after the break. Stay with us.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Well, let's analyze the markets now with Sunny Lesbia, our economist, who joins us virtually again. Mr. Lesbia, good, happy week, first and foremost, and thanks so much for your time. If you will, just, give us your analysis of the markets today.
Thank you, Mr. Ngumalo. A good afternoon to you and also good afternoon to the viewers at home. So what we're looking at in markets today is a bit of a mixed picture in the backdrop of President Trump's tweet there on Truth Social. I don't know if it's a tweet or whatever they call it on Truth Social, saying that he rejects completely Iran's response to a peace deal. So that means up to now we are not looking at any peace deal. But what we're seeing happening in markets, amazingly so, is we've seen a Qatari, tanker there passing through the Strait of Hormuz, though with having reached an agreement with the Iranians. So I think what markets are doing right now is abate the fact that the price of Brent crude oil is now above again the $100 mark, but we are still far off from the $110 mark and the $115 mark that we saw just last week. And earlier on in the month when they started 2 months ago, we saw the price go up to $126 per barrel there. So with this tiny movement of ships out of the Strait of Hormuz, and also with the magnificent earnings that are being declared by these energy companies, the likes of Shell, BP, all of those, shelling companies, Saudi Aramco, they are recording record profits, Mr. Ngumalo, at the background of this. So markets are cleaning whatever gains they can get given these dynamics that are happening in markets. So starting in the US, when we look at the futures market, it remains muted right now following that statement on Truth Social. But at market close, the Dow Jones Industrial Average was up 12.9 points, and the Nasdaq Composite Index was up 440 points. The S&P 500 was up 61 points. Now, that was a momentum that was driven by the fact that we are seeing a lot of, traction regarding the peace process that was before we saw the response from Tehran to Washington coming out today. So markets were really just optimistic. But what we're also seeing in markets is the resilience and the factoring in of that, of those swings in the price of oil. Right now we have a very fragile ceasefire that is holding on, though we may call it a ceasefire with a lot of fire, but the fact that it's still holding now, that gives markets a bit of an opportunity to breathe. And also that AI spending within the US economy, again, that was those are the factors that are driving markets in today's trade. And we are looking forward into what is going to happen in terms of those, interest rate decisions there. And also, I think what markets are factoring in, Ngumalo, is as we edge closer to September, October, November, when the midterm election season gets really running. So we expect President Trump to really just wrap his Operation Fury in the Middle East very fast to ensure that the Republicans do stand a chance in those elections. And then coming into the Eurozone, so Europe is largely reacting to those changes in the oil price. With the oil price cutting above that $100 mark, we're seeing Germany there. Frankfurt has lost 61.69 points in today's trade, while Paris has also lost 84.84 points in today's trade, with London just marginally moving up 4.96 points in today's trade. But if you look at the number in terms of the overall share volume, last week we were at 10,300 level, going for that for 10,400 mark. But now we're back on that 10,238 mark. So basically, we're seeing that reaction as well within the London economy. But this uptick that we are seeing today is largely buoyed by the fact that at least Keir Starmer is looks like he's going to stay, given his address that he gave just a couple of hours back on in the day regarding the state of the Labour Party. And then again, one other thing that we are seeing there is, there's talks of the UK going back into the European markets, being integrated into the European markets post-Brexit. So again, markets are reacting positively to that, because you'd realize that Brexit caused a lot of strain around logistics, around labor travel, around even educational travel, and also around the flow of capital. So reintegrating into the Eurozone region is really a strong point for the UK, and that's what the economy is rallying on today. Coming into Asia, the Nikkei there is lost 295 points in today's trade, but still staying at that 62,000 mark as a close at business of business today in the Oriental region. And then also, if you look at the Hang Seng, it has gained 13.13 points in today's trade. The Shanghai Composite Index there, being resilient and back up on that 4,200 mark, and then, gaining 45 points in today's trade. This is actually in the backdrop of rising inflation within China, but, we're looking at the stimulus and the fact that global demand remains very resilient, and we know that, China has a lot of what you call reserves of Brent crude, and we are looking forward to that meeting between President Trump and President Xi on Wednesday. So it is expected that President Trump is going to try and get President Xi to get the Iranians to come to the fold, and at the same time, it is expected that President Xi is also going to nudge President Trump towards some concessions so that a deal is reached and the Strait of Hormuz is eventually opened. So that's what markets are rallying to in the Oriental region today. And coming into South Africa, we're seeing the South African Stock Exchange still on a very strong footing there at 117,245 in terms of overall share volumes today, but losing some 643 points overall in trade. Now, that's in reaction to those news around the price of Brent crude crossing the $100 mark again, and also in reaction to the flows of capital that come with that. We always see capital flight when it comes to that. In terms of Eswatini, the Eswatini Stock Exchange remains muted, and in terms of gold and Brent crude has crossed the $100 mark, sitting at 103.84, given President Trump's utterances, and gold has lost marginally some 57.2 points in today's trade to sit at that 4,600 mark, which seems to be finding an equilibrium there. And then in terms of the currencies, we're seeing relative strength against the dollar and relative strength weakness against the euro, with another strength against the Japanese yen. Now that's in relation to the price of precious metals and a bit of strength against a bit of hope and optimism on the South African economy that's in markets this year. Thank you, Mr. Ngumalo.
Thank you, Mr. Spear. We have run out of time. Enjoy the rest of your day. Goodbye.